Today I'm going to share with you a magic indicator, one that I use in my trading on a daily basis. Now, am I 100% dependent on it? No, I am not, but it does help me when I'm looking to take a trade, okay? Whether it's at an area of supply or demand, it increases my probability at those zones. But first and foremost, I always say this, the two most key important concepts in trading are market structure and price action. Yes, you can trade with just simply being able to read the market, understanding which zones to take your trades from, in a sense of being able to understand the flow of the market. So if we're breaking through a major area structure and pushing to the downside, and we're continuing having what I like to classify as internal structure breaks to the downside, and then we get a nice pullback, okay, because the market will pull back to key retracement levels or areas within the market, okay? But that doesn't mean that they're always going to pull back to exactly where a movement may have started at. So you have to pay close attention to when the market gets to a key zone. In this case here, I'm going to show you supply zone, two of them actually that you could have taken a trade from. And if we get some time, maybe look at a few others. But I want to show you in using the indicator of my choice, which is the volume profile. It is a very good indicator to use as part of your trading. That's why I classify it as my secret weapon or my magic indicator that I love to use. It's really the only indicator that I will ever add to my charts, and have only added to my charts since I've been able to trade and be properly and consistent doing so. All right. Now this line you see right here, this is the VWAP. I don't even ever talk about it really, pretty much, at all. And I don't even really use it. I guess it's just, I have it on my charts, and it is there probably more for, I guess, aesthetics. Just kind of you want something in your chart to really kind of decorate the chart a little bit. But having a load of indicators in your chart, please do yourself the biggest favor. I'm telling you, how I found success was being able to understand market structure, follow the flow of the market, okay? That helps you read the market. If you can read the market, then you should be able to really see kind of order flow in the sense of the market, meaning where it's breaking through key areas and breaking structure, whether it's to the upside, breaking a major high, or to the downside and breaking a major low, and understanding the shifts in the market, okay, as far as the movement. And then marking your zones. I always talk about in my videos about marking higher probability zones, whether they're supply areas or demand areas, but being able to identify which zones make more sense to take trades from. And part of the strategy in which I break down in tons and tons of videos here on the channel. If you're not a subscriber, I highly recommend you go ahead, subscribing, spending some time watching the videos, because a lot of them are going into detail about the strategy and that I use in my own trading. So all it is basically just moving down from a higher base chart and then down to a lower base chart. So the scale down approach, in a sense, moving down from a higher time frame or higher base chart and then looking for entry on a lower base. But this video today is not about the actual strategy as a whole. I just want to show you how I use the volume profile and how it aids me in my own personal trading, and that's why I classify it as the magic indicator. The more confluence you have in your trading, okay, at a zone, the higher probability or the higher the chance of a entry or a trade working out in your favor. So this is a volume profile tool, and you can find them and use them. It doesn't really matter which one you use. I purchased one years ago, and the one I use is from a company called discotrading.com. That's their website, and I don't think it's up and running right now. It may be down. I know the site was taken down a few months ago, but they are still on the back end for current users and and people who have had or currently hold licenses. They are there to help. But as far as new purchases and new transactions, because of things going on overseas, when it comes to sanctions, at this point, they're unable to process any further orders. But it doesn't matter, again, like I said, what volume profile you actually use, because they all kind of serve the same purpose. The purpose of the volume profile is just really to show you on your charts a visual representation of where volume lies, when it comes to whether you're looking at a specific a specific day or several days or several months, and it depends on how you use it. Are you looking from it from a dynamic or a static standpoint? I'm going to show you the difference between two when it comes to the dynamic versus the static. Okay. I like to kind of use the dynamic standpoint versus static, but it depends on your trading style and what you're really looking for. But Again, what I'm going to show you here is just simply how I use it and adding more confluence. Remember, if most of you who are subscribers already to the channel hear me talk about the volume profile, I like to use it as a means of a GPS. Yes, it kind of points out a geographical area in which I'm focusing in on, whether it's a area of supply or demand. And then it just kind of lets me know, hey, am I in the right position or right area to look for, you know, kind of in a geographical from a geographical standpoint, to look for a short or to look for a long. If I'm looking for a short entry, then I'm looking at an area above the high volume profile, okay, slightly above it, maybe where the volume kind of thinned out. And then if it's at a supply zone where I have a zone that's untapped, meaning there's a gap back at to it. Yes, a fair value gap back at that zone. And then I see rejection on my lower base chart. Then I'm going to take the trade going back down because volume likes to move, or the market likes to move from from a low volume area back to a high volume area. And then you'll see a lot of times where it pushes right through a low volume area back to a high volume area. So if you see here, I'm going to show you the difference right now. And what I'm talking about. First, you have to understand what the market is really trying to do. And I talked about this last week, maybe Thursday and Friday, about structure. And of course, you can see what's going on here. The market was moving to the upside. And structure, really just breaking it down, is where the market is making higher highs and higher lows, continuously doing that until the market turns back around and starts to break through a key area of a structure, okay, meaning a major low. This area, if right below here at 17,667, excuse me. I classify that as a major low. So when the market broke through that area, it pushed to the downside, and we just started swinging, making breaking structure to the downside is what I'm trying to say, okay? So as it continued doing that, as you see here, it finally made this low right here, and then it pulled back. But then when it broke below this low here, we had another major or another structure shift to the downside where it broke this low right here. So at that point, I'm still looking for entries to go short. So as long as the market is breaking through some major low to the downside and continue breaking structure to the downside, should only be looking for opportunities to go short until the market turns back around. And in this case here, if it broke through this high right here. But I'm going to show you in reference to a supply zone, okay, and we'll look at a demand zone too, where the market broke structure and broke through this low right here. All I'm focusing in on is to mark my chart at a key supply zone. This right here being the first one. Now the market hadn't quite broke through this area here, but there was a structural break within this internal range right here, if you want to call it that, before it broke this major low. So when it broke this area right here, I went ahead and marked this as a supply zone because they have aggressive selling. And if you remember what I just said about fresh untapped zones, there was a fair value gap or a gap in between this area here in which the market didn't immediately pull back to the zone yet. So when it pulled back to the zone, and by the time it did, you can see that it actually rejected that area. But what we want to focus in on is looking to the right hand side of my where price is right there. Where at that time period, okay, where by the time it pulled back into the zone, look over here. When it pulled back to this area, we're kind of in this area where we're actually above this little small area of this little small area of high volume area right here, okay? Because when you pull us back right here, I'm talking about this first box right here. Look what the market is in relation to price. It's above a small little high volume area. Now there is a lower volume area right here, but within a lower volume area, sometimes you will have nodes, okay, where you may have a little higher volume at. But this is set on a dynamic from a dynamic profile, okay. Again, this is my weapon. This is the indicator that I like to classify as the magic indicator of choice that I like to use, and primarily the only one I like to use when I'm trading, okay. But anyways, this is dynamic. So this is set to based on a few days. And actually, if you take a look here, this is my 60 range chart. So this is my higher base chart. This is based on 90 days. As you can see right here, it says days to load 90 days. So that's looking at volume for the last 90 days and basically calculating it and showing you what volume looks like in this area right here. Okay, going back 90 days. All right. But this area, which I'm going to show you the difference between a dynamic and a static, okay? If I switch over to from a dynamic to a static standpoint, I'm going to go to composite, because that's what this is. This is a composite profile right here. And then I'm simply just going to go to use this. This is going to set it up where it's more dynamic versus static. All right, so now we see right here, let's zoom in. I'm going to do away with this. Okay, and as you can see now, we're above. Now that node really sticks out right here. You see that high volume area right there? All right, so the market pulls back to that area right there. It taps into a supply zone, and I'm looking to the right hand side of my chart, and I see this high volume node right here. I like to check trades again if we're at an area of supply above a high volume area, okay, where the market is volume is thinner, because when volume starts to thin out, the market kind of gets kind of scared in a sense. It doesn't really have any protection, so it needs to move to a higher area where volume or orders were placed at, or not orders were placed at, or more transaction as far as orders were processed at, okay? So when the market gets back to this low volume area and it's at this area of supply, it says, okay, I'm a little scared of being here. You know, I have a high volume above me, which I could bounce from, but I want to move back to some area of protection. So we're talking about supply. We're talking about a premium area, okay? Because when it comes to selling, we're looking for where prices are higher at, not down at the bottom, but up here. Buying, we're looking for discounting areas. So we want to be in a position where the market is at a premium area, okay, at a supply zone, where there's a gap that rests at a fair value gap, okay, back at the zone. And when the market gets into a low volume area, that kind of sets up the recipe. Those are all the ingredients that kind of set things up for something to happen. In this case here, for the market to sell back off on, okay? So then all we need to do is really go down and move down to whatever lower base chart you have and look for rejection, okay? A lot of times I'll move down to a lower base chart, try to find a, I either look for a breaker structure to the downside or try to find a zone, okay? Meaning a supply zone on a lower base chart to give me more confluence. That's what trading is when you get to a key area, key zone. The more confluence you have, again, the chances of the trade working out in your favor are going to, you know, simply work out. So again, this is the difference between moving between a static and dynamic. Static kind of looks at just what's going on. I'm going to say that again. Static profiles are going to be able to look at just what I have in my chart. If you see here, if I start scrolling in and out, you'll see that more volume comes to the picture up here because it's basically looking out at more volume based on the last few days. And as I continue doing so, you'll see volume starts to thicken up right here. But then when I start stretching it back out, you'll see volume starts to thin right here. This starts to thin as well. I see that. And then the volume disappears up top. And then the volume on the lower side, as you can see right here, probably it starts to thin out as well because it's only looking at the last day or two. All right. So, and then it blows it up in more, you know, so you can see it more visibly. Okay. So then the market breaks structure to the downside right here. Again, there is, once it finally breaks below this low, this is a major low right here at 17,411. When it breaks that major low right there, look what happens. Once it breaks a major low, you should already be looking for key areas of supply for the market to pull back to. All right. Cause it has to pull back, within some area within an impulse leg to the downside after a breaker structure. So even if you use like a fib retracement, all right, this was the high here, back down to the lower, broke structure. This is your 50% area. This is your 61.8 and then higher. As you can see here, the market pool is right above, a little bit above the halfway point, okay, of a impulse leg to the downside there. And then if you look to your right hand side of your chart, we're already into what? A high volume area. So it pulls into a zone, okay? You look to your right hand side. All right, we're above a major high volume area there. Where are we at? We're in a low volume area above here. Okay, now right here, if it pulls right to the zone, we're smack dead into a high volume area. The market likes to move to test at a zone, especially if we have a gap, and there is a gap right here. So that means that the market has to at some point come back to this area here because it's aggressive selling to the downside. It didn't immediately pull back to mitigate this area, which means it's probably still orders resting on the table right there. Yes, mitigation. Mitigation is simply where orders, where the market was, in this case here, it probably was, you know, institutions filling orders. They pushed the market real fast to the downside, leaving on the table orders that need to be filled. So it has to come back and mitigate that zone. When it comes back and mitigates that area, we're looking for it to be at a lower volume area to where the market kind of gets scared up, shaken up, and says, okay, we're in an area where we're feeling uncomfortable at. There's orders resting here. We're at a supply area. I'm going to look to go short. And I think I need to go back and reload my data because I'm pretty sure the market has sold off or pushed down to the downside some before it pushed back up to the upside here. So I'm going to go back and reload my data. But again, we're looking for areas where the market is above a high volume area. So that's what I like to use more so like a dynamic profile, especially on my lower base charts. So we'll look at a example of a demand area. Okay, let's do that right quick. As you can see here, we got that break of structure to the upside, and the market pushes back to the upside here. Now, when it starts to fold back to the downside, as you see it doing right here, all right, so it's making that run to the upside, and then eventually the market comes back down. Now, on the way back down, it didn't really break through any major area. Like I said, the major low is right here when it comes to external structure or a structural shift in the market, okay, meaning a major structural shift. Basically, the market really like it's trying to is going to turn its tide and start moving lower. Well, once it breaks this area right here below 17,668, if you want to say, then we know. But if we pay attention, it didn't quite break it when it came down here and tested this area of demand. This is aggressive buying to the upside. There's a gap there, fair value gap there, back at the zone, which increases the odds of a trade working out in our favor. So then we start adding on more confluence. Okay, where are we at? Okay, we're at a more of a discounted area, but pay attention to, again, if you want to use a fib retracement tool, you could use this just to kind of gauge based on the impulse leg. After the market broke structure right here, how far did it push up, and where is it when the market pulls back? Where are some areas where it may want to kind of test that, being the lower extremity of this impulse push or leg to the upside. This being the bottom right here, this is the latter portion of that leg where the buying started at. If you can get into a trade back down here in this area, that makes more sense, right? So when it comes there, it rejected that area beautifully back to the upside, as you can see here. Now, if we look at it and say, okay, what other means of confluence, do I have on my side? Look here, the high volume node here. Take a look. Where are we at? The lower portion down here where it taps into this demand zone resting right here. Remember what I said, the lower portion of an area. We're in a discounted area. Discounted areas we're looking to buy at. We're below a low volume area. The market's kind of shaking up a little bit because it's saying, okay, I feel insecure here. I want to be moved back to an area where I'm comfortable and feeling, hey, I got some protection here. My buddies are right here, left back at this high volume area. Okay, you want to be at the peak or the low end of it. So, anyways, the market rejects this area here, the lower portion of the demand zone there, and then it moves back higher. All right. So the more confluence that you have on your side when you're trading, then again, the odds of the trade working out, and it will also help increase your win rate opportunity as well. So just try to focus on things. Where am I at in relation to price? Am I at the upper extremity of a leg I'm looking to buy, or more so at the lower portion? Lower portions are going to give you a higher chance. Look at where how things are lining up with the volume profile indicator. And if you're below an area, okay, get the rejection, then you look to take a trade going back long. Try to stay away from trading right at the middle of a high volume area, because the market likes to kind of move up and down, in that means. So don't take a trade right at a high volume area. If it kind of pulls below it, and then it set itself up for everything else to work out, where you got that gap back at the zone, you're at a untested zone, meaning, and you're at a key area within an impulse leg to where the market could definitely react at, okay, then those are going to be the areas in which are going to carry you through and have a higher probability or chance of the trade working out. So I just want to share that with you today. This is, again, a magic indicator that I like to call it. I mean, it's really not, but there are a variety of volume profile indicators or tools out here. NinjaTrader, if you use NinjaTrader, has their own. I'm sure a lot of the other platforms out there, TradingView and Thinkorswim, they all probably have their own version of the volume profile, but it's all the same. It's just how you use it. I just simply use it to let me know, as far as in relation to price, am I above a high volume area back at the zone or above it? Again, I'm looking to sell. I'm looking to be above a high volume. And if I'm looking to buy, down below a high volume area, not right at dead directly at a node. So hopefully you guys understand this. Hopefully this helps out. And if you're not a subscriber, please take the time to go ahead and click on that sub button down below. Make sure you come over and join us and be part of the team. Also, make sure to turn your post notifications on so you don't miss one of the uploads here on the channel. And that's pretty much all I have to share. If you guys found value in today's video, before I do jump off of here, if you're interested in joining the Discord, the link to that is down in the description portion of the video. It's free to join. Click on it and come over and invite us on and join us on the Discord. But that's all I have today. If you found value in today's video, I would recommend taking a look at using kind of incorporating the volume profile, see if it's going to help you trade out. If not, but again, you don't need to use the volume profile at all. I mean, you should be able to look at, read, and understand market structure and price action, and be able to trade without any indicators. I'm telling you, naked charts are where it at, starting from scratch there. So many traders like to start piling on a bunch of indicators, and then they start allowing indicators to kind of give them a signal to get in a trade. Indicators lag, okay? So you have to understand that they are moving behind the actual price movement of the market. So just understand that. But the volume profile, it's either when the market comes back to an area where there's already volume being built, that volume is going to continue growing in the area. It's not going to shrink down. It's going to continue to grow because of there's just more orders and transactions taking place at a key area or price level. But that's all I had to share with you guys today. If you found value in today's video, please drop a like on the video, and I'll see everyone in the next trading video. And yes, we are moving into a new trading week, and I wish everyone success in doing so this week. Have a great trading week.